How's it going? We'll try to keep everyone on time and out to lunch shortly. This time last year when I was here, I think the gold price was $3,000 an ounce. I actually thought it was pretty strong back then. It's $4,100 this morning. Importantly, we had a strong project at $2,750 an ounce. We have an amazing project at $4,100. The biggest difference between Astral Resources last year and this year is last year we had a great project that we wanted to advance into production, but we were trading about 6.5 cents. We had a $50 million market cap, $2 million cash in the bank, and 5% of our register was actually institutional. Today we're trading in a range of 13 to 14 cents, a market cap over $150 million. We have $28 million in the bank, and the institutional representation on our register is over 24%. So we've actually gone from a company that really wanted to develop a great project to one that absolutely can. We are planning on delivering a pre-feasibility study in the June quarter of next year, and then moving straight on to feasibility studies to support that final investment decision. So in short, this is a company that is advancing towards production. So just onto the projects, we have two projects, Mandilla and Feysville. Mandilla is 70 k's from Cal, Feysville is 14 kilometres from Kalgoorlie, the heart of the West Australian goldfields. This area is rich in the infrastructure that you need to be able to develop and operate a gold mine. It has a well understood mining code, and the community is really supportive of mining. The scoping study that we did in September last year demonstrated a large-scale open pit development, 100,000 ounces per annum for 7.5 years. As I said, it was a great project at $2,750 an ounce Aussie, and it is spitting out cash at $4,100 an ounce today. We've also demonstrated regular resource growth since we started drilling at Mandilla in 2020, and we've now moved to Feysville, and we are continuing to demonstrate the ability to deliver ounces at $20 an ounce or under in a discovery cost. The RC rig on site's been chewing through the meters. We've done a program of infill at RRS. We've tested a fresh rock opportunity adjacent to the Paleo channel at EOS, and we've also just completed an infill line of drilling at Kamperman. Now with the diamond rig, we've just completed an infill program at Theia, and that diamond rig is now doing geotech holes at EOS and Iris to support a pre-feasibility study. So between now and January, we'll have results out for the Iris infill, the extensional drilling at EOS, the infill at Theia, and the Kamperman infill, all between now and January. So that drilling is done. Those results are to come out. Now, this is a chart I've actually been putting up for quite a while. Since we took over in 2020, we've added 1.4 million ounces across the projects. Mandilla's discovery cost is $17 an ounce, and Feysville, we just added ounces there at Rogan, Josh and Kamperman at $19 an ounce. So cost-effective growth. We've also been saying that Feysville has the opportunity to deliver several 100,000 ounce projects that can feed into a future process plant in Mandilla. Kamperman has been the focus of our drilling. We drilled one hole there in January last year, a diamond hole, followed that up with 9,200 metres, and then we put out a resource update. It was a small one, 84,000 ounces at 1.3 grams per tonne, but from only 9,000 metres of drilling. And this goes a long way to delivering on this commitment where we believe Feysville can deliver several 100,000 ounce deposits which we feed into Mandilla. So corporately, I said earlier, the biggest change for us is last year we were a company that wanted to develop Mandilla. Today we're a company that can. I did talk at this conference saying it was actually quite difficult to fund our business last year, and for many of our peers it's actually still very difficult to fund a gold junior. We have been focusing on doing good technical work, both at exploration and in the project development sphere, knowing that invariably the sentiment turns, and when it does, you want to position yourself to be at the top of the list for when all those institutions start shopping for exposure in this sector. That was one of our focuses. As I said, we moved from 5% institutionally held to 24% and climbing, and that puts us in a really strong position. $28 million cash in the bank and a clear pathway towards additional resource growth and delivery of the studies to take us through to production. At the board and management, we've been stable. We have the right skills to take this through to production. Now, I'll just move on to our project, the first one being Mandilla. So these Mandilla deposits, they're located next to a regional structure which is known as the Kamperman Shear. So that structure runs through the region, and there are numerous deflections on that structure, and one of those deflections happens at Mandilla, and that gives us this classic structural target for gold mineralisation. We have 4 deposits here: Theia, Hestia, EOS and RRS. 3 of them went into the study. The detailed mine designs that we're doing for the pre-feasibility, we're going to do those detailed designs off a pit optimisation which is based on $2,600 an ounce Australian. Now at that price, RRS, which is an additional 100,000 ounces, will come into the study, so all 4 deposits go into the pre-feas. Given the price is over $4,100, I would still say that $2,600 is surely a reflection of us being conservative as we go to take the projects forward. Here is a long projection. We've been doing an infill program here at Theia. The aim here is to actually be converting the inferred ounces, which are at the base of the pit, into indicated to support the studies. The 4 infill holes, all 4 of them have seen visible gold. We have observed visible gold. The one that you can see on the section there is MDRCD 920A. We saw 64 occurrences of visible gold across that hole. Now, I'll caution, VG is not a substitute or a proxy for an assay. Wait for the assay. But at the same time, it's a bloody good sign from our perspective that we're seeing the visible gold. So each one of those yellow dots on that blue trace is visible gold, and it aligns with the resource model, so it gives us confidence moving forward as we go to complete this infill drilling. This long projection is not our best projection, but it's the one that's got this drill trace. What's important here is this is a 5.7 to 1 strip ratio pit. It is the only 1 million ounce deposit in our region that still belongs to a junior miner, and it is the 3rd biggest in the region behind the Super Pit and Red Hill, both of which are Northern Star deposits. So incredibly a lot of value locked up in this one deposit. Moving on to scoping study, this is the one we put out in September. We are now strongly advancing the pre-feas. The first 7.5 years we're producing 100,000 ounces per annum. It's a 1.3 gram per tonne ore body and 5.8 to 1 strip ratio across all 3 of the deposits that went into the study. The mining cost we used was $11.60 per BCM, and we're reasonably confident that that's an adequate level of conservatism as we lead into the pre-feasibility. But with those costs and the current gold price, we're making $115 a tonne of free cash flow margin, times that by 2.5 million tonnes per annum, and there is over $280 million worth of free cash flow every year in this project. A couple of important points as you see that gold price move. I keep having to update the sensitivity table. It's 41.20 this morning, by the way. Free cash flow, 1.9 billion. Net present value at an 8% discount rate, 1.2 billion. Internal rate of return at spot is 160 odd %. This is a simple bulk scale mine. It has fantastic metallurgy, and it is very simple, tried and tested processing. Also importantly is this project showed a peak negative cash flow of $191 million. As I said, our market cap is over $150 million today, so we can fund this project. This is infinitely doable. Now, just with the pre-feas, as an update, it is certainly advancing. We believe we have a relatively straightforward pathway towards permitting, but you do need to do the work, and to that end we've put an approvals manager on our team. We aim to get our permits in next year, 6 to 9 months ahead of completion of the DFS. The process plant, OPEX, CAPEX and the non-process infrastructure, that report is actually due in December, well ahead, so this month, well ahead of our schedule. We have RFQs out to several mining contractors at the moment, so that'll give us an understanding as to whether that $11.60 is going to be close to the mark or not from a BCM perspective. More met testing underway. We are currently also doing the geotech drilling to support the pre-feas, and the actual exploration drilling we've been doing will support that increase in resource confidence, which is really important when you go through all those study stages all the way to a final investment decision. Now, Feysville is our second project, which is only 50 kilometres straight line of sight away from Mandilla. As I mentioned earlier, we updated a resource on this, so it's 196,000 ounces of 1.2. Feysville is different to Mandilla. It's bounded to the west by the Boulder-Lefroy Fault. The Boulder-Lefroy Fault is famous because it hosts several plus 1 million ounce deposits, so this is a fantastic location to be looking for gold. The gold at Feysville is associated with these north-northwest trending structures, and those structures are prevalent through that region, and the ethereal shear is the main one, and it runs through the middle of our tenement package. These structures are cross-cut by a later D4 northeast trending offsetting fault, and that offsetting fault appears to be really important with the mineralisation. So if you go north from Feysville, you get to the super pit, and Mount Charlotte is one of those deposits that sits on one of these D4 northeast trending off-cutting faults. Again, a good location. The grey box here, which is one I've been talking about for some time as well, is basically saying if we get some high-grade mineralisation from Feysville and then we put it into the Mandilla process plant, we'll go from 100,000 ounces per annum to 120,000 ounces per annum. That's the opportunity that we're chasing. We added 111,000 ounces between Kamperman and Rogan Josh at 1.3 grams per tonne, so we are moving towards delivering on that commitment. So just focusing on Kamperman, so this long projection here, the picture there that's on the left of screen is a 1 metre interval that assayed 419 grams per tonne. We just panned it out of a morbid sense of curiosity because we thought there'd be a fair bit of visible gold in there. Obviously there is. That intersection was 25 metres at 24 grams per tonne, not included in the mineral resource estimate, so it presents as upside. This next one, we did a line of infill drilling at Kamperman. Again, this isn't included in the resource estimate, but you can see 33 metres at 4, 22 metres at 4.4, 22 metres at 5.2. So very good grades on that section. We've just done another round of infill, and those results should be out in the new year. So, to summarise, $28 million cash in the bank. We have gone from a company that really wanted to develop the project to one that now absolutely can. We are funded through to FID in the first half of 2026. Our projects are located in this Kalgoorlie Goldfields area. It's an infrastructure-rich area. It has strong community and local government support and a well-understood mining regulatory framework. The scoping study showed that Mandilla is an awesome project and was printing a lot of cash. It is minting it now. The PFS is on track for the June quarter. Again, a conventional gold deposit from mining all the way through to processing. And our mineral resource estimates, we've been estimating them at $2,500 an ounce. We're actually doing the studies at $2,600 an ounce. So that means the resources will convert into a production target. So it is impossible for the pre-fees not to be significantly bigger and better than scoping. Thank you.